Is with us, Joint Managing Director at Motilal Oswal Financial Services. Raamdeo, good morning. Good to have you on the show. Now, of course, I know next month you'll be going to Berkshire AGM. So, good question to ask you. Are you comfortable with market valuations right now, for, especially with the fact that earnings have not caught up yet? But are you comfortable?
Well, I'm always comfortable with the market. It's no issue. We have to only see in a change situation, how do you play? When markets were at say 7,000, 8,000, job was easier. Now you have to be even more careful what you buy at what price. Because now most of the guys, they know at what to buy, what is good. But what you want to buy is not available at your price. So then you have to find something. First thing, you'll find very few things which are good and which probably might be reasonable priced. So finding good thing at reasonable price is the biggest challenge in this market. Okay. And so that makes the job even tougher. And you have to be far more focused on to saying that like we have done nothing for last 6 months. We're just doing whatever we had done and sitting on to that or buying more of that.
Okay.
So finding some big idea and piling onto that has not happened. Okay. So it is becoming difficult.
Okay. What is the 12-month trailing now, just to get us down to reality? Are we at 22?
Pardon?
The 12-month trailing valuation of the market, multiple of the market?
Yeah, it's about, must be about 22, 23.
Okay.
Yeah.
So at this juncture, let me come to some of the sectors that people appear to be discovering. Real estate?
I'm not in that. So, yeah, I mean, see, people will find, as I said, different spots where things are changing. And those who are in the early trend seekers, I mean, some of the sector will definitely turn around. And maybe one of them will someday PSU bank, someday this real estate, or even the metals we saw last year was that steel came back very strongly. Maybe someday cement has to be, it is overdue that cement comes into limelight. Because without cement and steel, you cannot, I mean, construction boom has to start one day. Whether it is 6 months away, 6 years away, only time will tell. But that boom has to happen. So underlying stocks can surge very quickly, because when you buy from the depression, generally from very bad to bad is a very exotic journey. So like we saw yesterday, all the reality starts. I mean, people hammered for the months, years. They kept hammering. Yesterday, the first flush was 10%, 15%, 25%. I think one stock was 40%.
Yes.
So those kind of fireworks do happen.
Yeah, generally, you tend to see spring action in these under-owned sectors. But Raamdeo, we'll keep talking about sectors. Every time you come here, you teach us something new in terms of market wisdom. I want to know, have you read any recent books where you can sort of impart some wisdom in terms of market? Anything new?
Yeah, of course. We are always reading. Every 15 days, I finish a book. So it is the books only from where you learn. Yeah. So I finished a book called Investing, the last liberal arts of investing. By Robert Hangstrom. Very good book, extremely good book. So there he talked about the averages you talked about. Say, what is the average, say 22 or whatever. These are market averages. But if you go into that, it is not, I mean, there is hardly any company at 22p.
There is no number, yeah.
Yeah, so what happens is, one of the biggest myth in the market is that index has done it 15% for last 34 years. Okay, so this averages. So averages have one fundamental quality, that the distribution of the population of which you are taking out average, it is presumed, I mean, that 50% is on this side and 50% is on other side. Okay, so stock market, when you're saying it has done 18%, so and 4,000 companies are listed, generally it is assumed that 2,000 companies would have done below 18% and 2,000 companies would have done above 18%. But the world is not so simple. Okay. Always markets are right skewed. Okay, it's skewed market. So what happens is, very few companies, they do, 10% will do bulk of the 80% of the performance, and 90% will share that 10% or 20%. So what happens is that out of 4,000 companies, about 400 companies would contribute almost 70-80% of the market cap growth.
Okay.
And 90% will share the average, just for the sake of name.
Yeah, Raamdeo,
is that one of the wisdom of that book?
Yeah, that is one of the things I learned. See, there are a lot of things in that, but kind of I was aware in the other places. So what it means is that while operating the market, don't be carried away by the averages. So what he's saying is that when you say market is up or market is down, So he has given an example between 76 and 82, market remained at 787, 757 or 787 in Dow in US. During that period, Buffett's money grew by 6 times.
Yeah.
Okay.
So what it means is that market is down by 5% or 10%. That doesn't mean anything in the marketplace. Those 200, 300 companies are growing continuously. It is our job, the active manager's job, to figure out those winning companies and put one's money into them and make money.
Oh yeah, and I've identified some of these companies in the past. Your own portfolio has done well. I just wanted to discuss, you've taken a big bet on D-Mart and of course on RBL Bank. D-Mart, I think you got anchor allocation.
Yeah, anchor allocation, that's it.
Yeah, but that's done well now. And trading at
that is a lucky kind of strike.
But what do you do with these bets now? And
now that's a dilemma in the sense that what we have is very small portion of the fund, and typically we like to be like 5%, 6% of the fund. So we have only 0.5%, 1% of the fund. So we'll wait for our time.
And on RBL Bank?
RBL is there. I mean, it's doing well.
But it's 5 times price to book doesn't concern you?
See, we have not bought it for 6 months, 8 months and all. We are in there for long haul, because none of the companies are created for 2 quarters or 3 quarters, and the prices are not such that from there they cannot grow. So but then what happens is, when your valuation is high, your prospective returns go down. Now prospective returns in the companies which are expensive, their very near-term return, 1 year, 2 year return is going to be very bad. But 10, 15, 20 years return is going to be still reasonable. Okay. So what we are saying is that we will not start a very expensive valuation. We'll start a reasonable valuation so that our short-term return, prospective return in 12 months or 18 months is also reasonable, and it is very attractive on a 3-year or 5-year or 10-year basis. Okay. So we don't want to buy a stock which is in or out in 6 months, 1 year or 2 years. We fundamentally start with 10, 15 years, 20 years horizon.
Fair enough. Okay, let me come back to the theme that the market is now very excited about. You spoke about this possible construction boom, maybe because of housing. How are you playing it? You told me you're not in real estate. Is cement the way to go? Housing finance?
Housing finance is the one, because all the houses have to be funded. I mean, now even rural housing have to be.
That would be the best theme to play for you.
I think, there will be only few good housing finance companies. But there will be so many cement companies, so many steel companies, so many contracting companies, so many house owners. What to buy? I mean, you can buy either the aggregates like paints or cement or fittings, those things you can buy, air conditioners, fan makers, whatever goes in the house, bed makers. So you can think about the.
Jalaj has left Asian Paints, you're not worried?
I mean, in this kind of corporate, these kind of things keep happening, Okay. Somebody, I mean, the whole management team, whole promoting management team is now away, and only professionals are managing. So I think it will have not that much kind of impact.
Raamdeo, you've never been very high on Reliance. I mean, I have not seen it in your funds for many years. But it's now, as of today, it's overtaken TCS as the highest market cap company. Do you regret not buying it in the last 6 to 8 months?
Not at all. See, I mean, I need to know my 20 companies. And that doesn't mean that only 20 companies will perform. There will be another 180 companies which will also perform. So today I can miss about Reliance, tomorrow I can be missing the India Bulls, day after I might be missing. There are 1,000 companies which are doing well and I don't have them. Yeah. So, I mean, I have to regret if my funds, my 20 companies don't perform. Yeah. In fact, it took me 35 years to focus on your 20 companies. Don't focus too much on the companies you don't have. Okay. So it doesn't matter. And I mean, and the day on which we get confident about that stock, we can get in that stock any moment.
Okay, one more theme which everybody plays, GST, the informal will become formal types. How are you playing that, if at all?
Let it come. Still 3-4 months away. There will be enough chaos, and in that chaos we'll try to find who is getting hurt, how. See, GST once rolled out, it's like a broken egg. You cannot roll it back. Okay. And I'm quite sure there'll be difficulties. And it is not going to be everything just day one and everything is perfect. So as it is rolled out, we'll see, because this is the first time it's happening. Yes. So where exactly is the impact? I'm quite sure the good companies become better. and big companies will become bigger. That looks to be the theme, and we are generally in all the leading companies in that respective sectors.
Okay. Finally, Raamdeo, the next big bet, AU Financiers, IPO in next 1 month. I think you
Is it
hold
next
it.
1 month?
I've been told that. You have been early investors, of course.
Yes,
So what's the big story here?
See, this is another banking company which will benefit out of the private license and the PSU segment. This is 2/3 of the bank, which is so value is migrating from PSU banks to private sector banks. And among private sector banks, you have all sorts of banks like HDFC, ICICI, Axis, RBL, Yes Bank, and so all this whole list is there. And this is a growing industry. So now this is yet another new kid in the block who has got the license, and they will roll out. Till now they were the NBFCs, regional NBFC. Now they'll roll out as a bank, and you have to see the progress of this management team, how well they can do.